Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to OPEX, Quad Witching, and Casual Friday retail trading team. This is Master coming to you live with your routine briefing. And not too much has changed since yesterday, so we're just going to cover some interesting facts and move on with our days from there. So we have a long weekend. As a reminder, I'm sure most of you know that by now, so we'll be back here on Tuesday after we get today finished and done with, as they say, and we're going to just go ahead and jump right in the briefing here. So big OPEX, it's the largest June OPEX on record. There have been a lot of record-breaking ChopExes as of late, and if you notice, the tape's been much slower than normal on these expirations. So very often expirations are just kind of choppy. Once in a while, we'll get a semi-trend to end the day, yet I wouldn't expect too much today. Obviously, be vigilant. There's a lot of frothiness still in the market, as we'll see just based on yesterday's move. Yesterday's move was actually a 3 sigma SPX close, and what that means is it price closed in a place where it only closes 0.1% of the time, and I'd have to run the specific math on it. I dare say it may be even less than that, because the outlier move was at about 44.12, and we ended up closing somewhere around 44.30. So absolutely crazy move relative to that expected move yesterday, and that's really the coolest thing, I think, from that briefing today. And really, everything else just revolves around the overextension and what happens around this 440 SPY trend line that comes from the October 13th low. So moving forward to the warm-up, just to start the day. So we did have an open drive, a bearish open drive, that until SPY trades 443, let me make sure we haven't traded 443 since that open. Yeah, until we trade 443, the bears are in complete control. We have not seen unwind the open drive, and the past 2 open drives have actually been, or at least 2 of the past 3, I believe, open drives have behaved as we expected, which is price never revisiting that opening price. So if we do trade 443 on the SPY again, watch for us to auction in the opposite direction, which will in case be toward that high for the rest of the day. So we opened right near that high. I believe on ES it's a lot more clear, but we opened right near that high, and I think in the Nasdaq we actually put in a new high before descending, and so that's kind of the level I'm watching there. Profile itself, TPO, is neutral, what we expect on ChopEx. In fact, pretty much every ChopEx, you do have one of those neutral profiles, at least in recent memory, because we're all just kind of chopping around. Everybody's getting their business settled and moving on to the, in this case, long weekend. So the most important thing from this document are that graphic that you see on the right there that shows volume profile behavior. I think that's one of the most important graphics to trading in general, to crystal balling in general. We'll say outside of raw price action, those setups are often pretty reliable. And the second thing I want to draw your attention to are rather those SPY levels, which you can see we have a lot more than normal because the levels are building. We have a few gaps. We have that, as you'll see in a slide in a second here, we have the top of that value area high, and then we have just some various swing highs and lows to watch going forward here. So this document stays updated as it becomes pertinent. I think and hope really that we're good for the rest of the day here, and that we can just kind of come back, revisit it on Monday, or Tuesday rather. So like everything else, it's available in the description of this video along with all my cool little resources. So just a quick overview of what I did today. I did not trade well. I was feeding my animals at the open and I missed that really easy trade. That opening trade was just a straight fade, in my opinion. So I missed that, but I got a couple other good ones. I did have a successful first trade, which I almost never take a second after that first successful trade. Yeah, you had that really, you can see it if you look at a 1 minute chart. A really nice doji as we ran that overnight high. This is on NASDAQ, so I like to day trade. As we ran that overnight high, so I had to take the second trade, and it worked out pretty nicely. So nice little day, much better than normal for expiration for me. And right now we're shopping around. I'm really happy to be out. So that's what I did. And let's take a look at what's more important, and that is the bigger picture moving forward. So first thing, this is the weekly chart. The first thing that we're going to be watching is obviously that high that we put in yesterday, right about 444. Yeah, really the most important thing for me is going to be the top of that value area high. I've been saying pretty much every briefing now to watch those setups, so go to the warm-up document and check them out. Watch what happens if and when we do retest that 428 high. Right now we're still in a state of imbalance, yet eventually we're definitely going to retrace a little here and watch what happens around that 428 level. So that's really the first level on the chart here. That other yellow horizontal you see is just a 3-day swing low on the SPY, so you see that pop up in the daily chart. That is an important level, yet really the major level for me, the nearest major level for me is that 428 level if and when we do come back and test that. So just as I've been reiterating for the past couple of days, yes, we are extremely overextended, comically so even. However, until we get back and retest that 420 level, we are in a state of imbalance favoring the bulls. So any type of shorts here are much riskier, and you're definitely fading a strong trend. So just be aware of that until we go back and retest that 428 level. So on the daily, you can see what I'm talking about, that I believe that's 433 on the SPY. That is our current swing low, and then yesterday's high is our current swing high. So nothing too fancy here. Really the most important thing is that trend line that you see, kind of, I believe the term is bisecting the candle, and you can see that that is the October 13th trend line that is going to be also, remember, resistance becomes support, so that is also going to be right near the top of that doji from a couple days prior, now 3 days prior, and that's just really what it comes down to from here. So I would not expect anything clean. Obviously, it can be clean. It can be a clean bounce. I'd expect a lot of chopping around this trend line, so just be aware of how to react to it and relative to our other levels. Yet as long as we're above it again, shorts are above 428, really super risky. Yet above that trend line, you have a major structural component that is right now acting as support for the bulls. So just be watching that trend line. Go ahead and draw it on your own chart if you so desire. And that's just really the major level going forward. And we'll just keep adding new highs and lows as the days and beautiful times progress. So we're outside that 4 sigma band. Now we're way outside that 4 sigma band. Again, comically so. This is a extremely funny little market right now. We are at levels of overextension. I'm not even going to talk about RSI, but obviously the RSI is there. Yeah, just relative to that VWAP band, we are in the nosebleeds. Definitely high in the nosebleeds, and we have cleaned up everything on the upside. We talked about the TPO. That naked POC is now well below us, about 40 points below us, I believe. Let's see. Yep, about 40 points below us is where that was, and so now it's kind of really irrelevant to me, and so that's why we're just paying more attention to these SPY levels, and we're watching what happens again at 428. Below 428, we'll start talking about the other gaps. You can see some of those other levels in that warm-up document. Yeah, really right now it's a matter of the trend line, the high, and 428 for me. And then obviously if you want to throw in the swing low there, that it might be another fun little area, yet value is everything to me right now in this market. So I did update that chart that I've been talking about, and this is really the most important chart for me. I could have gone back farther, literally as far back as I have data for SPY. Every single time you pop out beyond that 4 sigma VWAP, be it to the upside, to the downside, there's always a dramatic correction back in. It's really that simple. So could this be different? Could this be the only time in the history of the data I have for SPY that doesn't happen? Yeah, sure. Probably not. So again, this is why that's the most important chart. I'm going to keep saying that until the cows come home, or whatever that idiom is. We have to correct relative to that SPY VWAP. So yeah, we could have another consolidation like we had in April, where the VWAP kind of catches up. Yet as long as we're beyond it, we're looking definitely for a fade. So I'm not getting long here. Again, intraday is completely different, but in terms of talking wider portfolio, especially in options, given where volatility is and where the premiums are, I would not be even, again, not financial advice, blah, blah, blah. I would not even be thinking about any type of longs because of where we are relative to that view up. So if you're watching that, that's again that 4 Sigma view up. I'll keep ranting about it until my voice is hoarse and or we correct. So that's just an updated chart, and I'll keep that updated as time goes on here. And if you want to check it out yourself, just put a view up on there. You're going to need, I use Sierra. I'm sure it works in TradingView, but you're going to need a platform you can look at the VWAP standard deviation bands, and we are well beyond that 4 Sigma. So just overlay that 4 Sigma onto a SPY daily chart, and you'll see what I mean. I think it's the biggest layup in the world for a correction of some sort coming up. So are we going to go test those October 13th lows? Again, no. Heck, we may not even go back and touch that 200 SMA yet. We almost certainly will have a decent test of that 428 and probably a little bit lower at the very least. So watching that, I think that's the most important chart right now. So that's why I just spent so much time on it. Moving forward to our TPO, I did again update this a little bit and I zoomed in just a little bit. Again, the TPO, I think the couple takeaways. So where's balance? Right now we're trying to balance right about this 44, 60-ish level. I think really 44, we're going to end up being somewhere around 44.40 where that naked POC was, and that is the tentative balance. Yet, if you look at the TPO, this is just a sample of it. Ugly, ugly structure, just so much junk below to clean up. I think supporting that correction thesis relative to that 4 Sigma view up. We just got to clean up some of the stuff on that TPO. I don't know when yet. Again, long-term plays to the long side right now are very risky. Just that's been my experience. I've been staring at the stuff for a long time. When it gets this ugly, some type of correction to clean it up does occur. And you saw that on the upside throughout the bear market. So I don't see why it wouldn't happen to the downside, at least to a much more milder degree in this what is now a bull market. So that is the TPO balance right now at 44.40. Watch what happens if we do start to build below there. First sign of trouble. But really, again, I'm focused on those SPY levels. So just keep tabs on those SPY levels, and that'll guide you real nicely, I think. So finally, volatility, still consolidating, basing, some might say. As I said yesterday, I'm not even looking at this chart really until we either break below 1640 or above 1740. But even below 1640, I don't really care. Again, it goes back to that 4 Sigma VWAP band until we correct relative to that. I think price action is a lot more important than volatility. So again, watching our SPY levels, yeah, when you start to see that 1740 break in the /VX new futures contract, when you start to see time and value build above that, perhaps that will be a leading indicator toward a minor correction that may go correct at least one of these gaps that you can see highlighted with those yellow rectangles. So moving on to macro land, that's really it in the price action. Again, I don't need to harp on this, I don't think, too much. It really comes down to that SPY chart, and it really comes down to our SPY levels. So I just wanted to be thorough there. So here's just a really quick macro overview. I'm not going to read these slides to you. As always, they're available in the description of this video with everything else. So you can read them yourself or get the Tier 1 Alpha newsletter. Again, not affiliated. If you want to get the full insights from them, these are just some of the snapshots that I like. And that was in the, excuse me, let's try that sentence over. Starting with what went on in call volume yesterday. Couple things. So obviously it's a record in itself, yet I thought one of the most interesting about this was a significant portion of this was in longer tenured contracts, not these 0DT cycles. So we are definitely in the realm of irrational exuberance. I don't know. I want to just keep saying this because I don't want you to think that I'm super short or anything right now. I have zero shorts on right now, yet again, the risk reward does not favor much more upside for some type of correction, and this is just kind of supporting that. And you can just see that as well, and where we are relative to the key gamma levels after the squeeze yesterday. Again, vigilance is super important as we move forward, just because as we've been melting up, if history can be a teacher in this, it often leads to some correction, and you can read that full slide if you want by just accessing it. And then again, I just got to talk about the RSI. I'm not huge on RSI. I like it for looking for divergences, yet it's notable that when we get to these levels, there is often, again, some type of corrective action. So there's that slide as well. And then finally, the breadth, which is what we have been, or I have been tracking most closely as we've been rallying here. Breadth is still looking pretty good for those bears. So despite the fact that we are at those extreme levels, again, I'm not expecting, at least at this point, we're going to need quite the move. I'm not expecting resumption of the bear market. I do think we are in a bull market. And as I've been saying since really beginning these briefings, I think that the bear market concluded, the secular bear market concluded on October 13th. And I've literally been saying that since starting these briefings. So although I think, and I keep saying correction, I keep saying risk off if you are along, I'm just expecting a correction. So correction is the word of the day, but you get my point. I'm not talking necessarily, by the way, about like a 10% full correction. I'm just saying a little bit of a breather to get positioned more cleanly relative to that 4 sigma VWAP, which is the guiding light right now. And then once we do that, we'll start watching this October 13th trend line for a real breakout and move toward, I think, new highs after that. So that is all I have for you. I hope that you have an excellent weekend. I'm going to follow up just to package everything nicely with that newsletter. And again, for the third or fourth time, all resources and such are available in the description of this video. So if you found any of this information useful, I would appreciate that thumbs up to help with the YouTube algorithm. And I'd also appreciate any engagement in the comment section of this video, as well as on Twitter @RoutineTrader. So I thank you for your attention and stay classy until Tuesday.